Hey guys, I'm back with Peninsula Energy. I know a lot of you have been requesting it, so I'm here to finally get to it. As I said, I'm trying to get through a bunch of your guys' requests, so now let's get into Peninsula Energy really quickly. Also, I'm going to try and make sure to stay close to the microphone because I realized that was making my audio sound back last time when I was backing away, but that's not very important. Let's just get right into the video. So we can see here Peninsula Energy, ticker symbol PEN, or just PEN, I guess, on the Australian Stock Exchange for 24 cents and $244 million in market cap at $4.55 AUD per pound. For over-the-counter exchanges in the US, they are PENMF at 19 cents per share with a market cap of $198 million with a price per pound of only $3.69, which is actually not too bad. Again, when I was first looking at these companies, you would see lots of them with like sub $1.50, sub dollar price per pound, but compared to some of the companies I've been doing now, often we're seeing $6, $7. So in today's environment where the stocks have been pushed up a good bit more, $3.69, that's actually pretty good. Now, very important here, only 83% or, well, 83% of you guys watching are not subscribed, at least according to this chart that I pulled out like a few weeks ago. So maybe it's a little different now, but, you know, that's not too important. So, you know, if you're not currently subscribed, make sure to go do that. That helps out the channel a lot. So let's move on to the charts really quickly. All right, so on the 6 month here, you can see that, of course, like all the other companies, we had this long consolidation phase here throughout the summer, and then they came up a whole lot with SPUT, pulled back down, came back up, and yeah, same pattern we see usually here, right? We're a little bit off that mid-September SPUT high for the most part, but we're still definitely well above the August and kind of late September lows here. Again, the max chart you can't really use just because of all the shares outstanding differences and things like that. So just going out over a few slides from their presentation, this just goes over their corporate overview. We see 893 million shares outstanding, which is, again, way too many for my liking, but compared to some of the other ASX stocks, not too bad. And at this time, they had no debt, and when I was going through and putting the numbers in my DCF, they still had, like, I believe about 500k, 600k in debt. And then they had, again, this cash is about the same at 6.8 million. So their uranium project has 53.6 million pounds, which is definitely on the larger side. And so we can see then when we go over here, they're all licensed and things like that, which is always a good thing to see. And a lot of their monitoring, processing, and wellfield production facilities were all constructed in 2015 or later, though the production is currently paused because they are transitioning to low pH ISR. And so, of course, it's good that this is all new stuff and it's already there. So, of course, it would be even new if they're developing now, but here it is already fairly new and they don't have to develop. So that's good. And they'll only take 6 months to return to production after they choose their restart decision. And of course, that's going to depend on market conditions and the price of uranium and all those kind of things. So, of course, technical optimization activities and study updates, moving on to agreements, funding, that sort of thing. And then their final investment decision, they will choose what path they want to go from here, if they want to develop for uranium production from new areas or just continue out of their current area they're developing from, but with the transitional facilities going from Alkaline ISR to low pH ISR. So going on to some notes I saw from the CEO's interview on Crux, I will say I really like the interview. I really like the CEO. He definitely seemed like he knew what he was talking about, all that kind of thing. So it's always a good sign when you see a good CEO, because sometimes you see a company with great financials but a not very good CEO, vice versa. So let's look here. We can see he had said their field demos using the low pH ISR had been running for about a year, and their low pH ISR has allowed for recoveries in the 90% range compared to the 60 to 70% range their alkaline ISR was achieving. So of course that is significantly better because they're recovering a lot more uranium. And so Peninsula is working on a new feasibility study to showcase the new developments, which is expected for the second half of 2022. And so they've already been producing some uranium, or were producing for a little bit of uranium earlier this year and last year using their alkaline methods of ISR. Again, I'm just going off what he said. I don't really know the difference here because I just don't know it. I'm a numbers Excel guy, okay? I don't know how any of the mining stuff works, all right? But we can see because of that, they shouldn't need to dilute shares or take on as much debt to continue operations as some other juniors. At least they shouldn't need to. Of course, they still can, but they shouldn't need to because of this. And they've already been permitted and have a production team because they're already producing, so you don't got to worry about getting a whole bunch of employees and things like that to start producing like a lot of other juniors have to do. And in a sense, he wasn't afraid to, I guess, trash talk other uranium juniors, of course, without naming any names. And I definitely like when CEOs do that. It definitely shows me that they are very confident, similar to John Borshoff of Deep Yellow, right? He's kind of trash talked a little bit to other juniors in general, similar to Peninsula CEO on Crux, that kind of thing. I always like when the CEOs do that. It shows they're confident, and so, again, the CEO of Peninsula Energy seems very competent in my opinion. So, going over their project overview, we can see here that Lance has 53.6 million pounds in the ground, and so their royalty, I didn't get an exact number because they put their OPEX and royalty together rather than separate them. So this OPEX does include their royalty when we get over to that. So the grade here is very, very low, 480 parts per million, but of course that, because they are using the ISR, that helps make up for it, and they are also going to have $5.1 million in capex, which is just going to be transitioning, and so the rest of their capex is actually quite high because they need to develop new facilities to mine other areas of their project. We see the total capex here of about $461 million. Now, OPEX here is pretty good at only $15.59, including the royalty, so that's really good. And then for construction, like we saw earlier, only 6 months, and they would expect to produce for 17 years, so that's a pretty long production life. That's good to see. And they have a 21% tax rate and expect to produce 33.4 million pounds, and they are also working on selling an exploration uranium project in South Africa. So now let's hop over to their DCF I built. Alright, so we see here at current uranium spot price of $41.50, they are not profitable. We see that with a lot of these companies, so no big deal there. But they actually look really, really good here. We see at $60 uranium, they are only slightly overvalued, and at $80 uranium, they see over a double here, which, compared to lots of the other companies at these prices, a lot of the companies at these prices are barely even, like, profitable when we're talking at $60. Well, that's an exaggeration, of course, but, you know, they'll be like in the range of like $80 to $100 to be a fair valued company right now when we're talking uranium spot price. And so the fact that you guys are only going to need $61.10 to be fair value, that is insane. Peninsula definitely looks like they've been flying under the radar, because that we kind of saw that their price per pound earlier being quite good. Though, of course, they already do have some contracts in place, so they might not be able to sell at the higher prices entirely, which may hurt them, but they'll be able to get on right away, similar to lots of these brownfield projects that Boss and Lotus have, so that's also a good sign. All in all, Peninsula looks pretty good, but of course, do your own research, because there's always more to it than what I show in these quick little videos. And so, thanks for watching, and I will see you next time.